I think that's because as rates have gone higher and the dollar has gone higher, they're going higher because of the nervousness over the rest of the globe. And there's almost like this safety trade, right? So I think gold is holding up partially. We still have we have China buying massive amounts of gold. They revealed that recently, that they're still buying. A lot of other central banks. So the demand for gold is out there, and also the safe haven aspect. So even though the stock market's close to its all-time highs, money is still flowing into gold. Now imagine if the stock market starts to cascade lower and we get into a recession, gold could really head higher. And I'm in the camp that by end of year, we're over $3,000 an ounce on gold, which isn't that far away. In all fairness, it's only about 10% away or so, a little over 10%.
Gold is holding firm despite rising interest rates and a stronger dollar, driven by global nervousness and a safety trade. Central banks, particularly China, still buy significant amounts of gold, underscoring strong demand. Even with the stock market near all-time highs, gold attracts inflows as a haven. If the market declines or a recession hits, gold could surge further, potentially exceeding $3,000 per ounce by year-end, a gain of just over 10%. Gareth Soloway, a renowned trader, technical analyst, and educator in the financial markets, explains the dollar remains strong due to global economic struggles, with regions like China and Europe facing difficulties. As a haven asset, money flows into the dollar despite de-dollarization talks. Rising yields and inflation pressures, especially in Japan, further bolster the dollar. For now, the U.S. economy is outperforming others, maintaining the dollar's dominance, at least until the U.S. economy shows signs of weakness. Gareth highlights gold's impressive performance, holding near all-time highs despite a strong dollar and rising rates. This resilience is driven by global nervousness, central bank demand, especially China, and its role as a haven. If the stock market declines or a recession hits, gold could surge, potentially exceeding $3,000 per ounce by year-end. Technically, gold is near a breakout point, and a pullback in the dollar could catalyze a move to new highs. Let's dive into the video for more insights. If you enjoy the content, don't forget to give us a thumbs up and subscribe to our channel for the latest updates.
I could just summarize real quick. So the dollar has been so strong, a couple reasons. So number one is that the rest of the globe is doing very poorly, right? So you have China, you have Europe struggling, you have a lot of other areas. And so money is coming into the US dollar as a safe haven asset. And so as much as the Bitcoiners out there want to say, hey, the dollar is no more, the dollar's, de-dollarization, as we've heard about for years, the essence is the dollar is still king dollar, and it's still going to be the safe haven, at least for the foreseeable future. So I think that's one of the main reasons. And I think overall, it's as yields go up, people get more and more nervous. We've seen Japan looking tricky because they're going to have to raise rates because now they have inflation bubbling up, and it just pushes more and more money towards the US dollar until, and this is the kicker, until the US economy starts to struggle. But right now, the economy in the US is like the golden child compared to the rest of the globe. It has stayed strong while most other economies has faltered, and that's why you've had the dollar so strong. Yeah, and this is so impressive for gold, right? Because if you're the old school gold investor, for the last 5-10 years, it was like, okay, when the dollar goes down, gold goes up. But instead, we've had the dollar ripping, and gold, it's not at its all-time highs, but it is so close to its all-time highs, and that's impressive to say the least. I think that's because as rates have gone higher and the dollar has gone higher, they're going higher because of the nervousness over the rest of the globe, and there's almost like this safety trade, right? So I think gold is holding up partially. We still have we have China buying massive amounts of gold. They revealed that recently, that they're still buying. A lot of other central banks. So the demand for gold is out there, and also the safe haven aspect. So even though the stock market's close to its all-time highs, money is still flowing into gold. Now imagine if the stock market starts to cascade lower and we get into a recession, gold could really head higher. And I'm in the camp that by end of year, we're over $3,000 an ounce on gold, which isn't that far away. In all fairness, it's only about 10% away or so, a little over 10%. Chart wise, look at this beautiful wedge pattern. So look at how gold just has hovered and held this line over and over again. And now, are we getting a breakout here? Like, think about this. If the dollar actually gets a pullback off of this level, that could be the next catalyst for us to move up on gold back to the all-time highs up here. And I think that's very, very possible here. We're borderline breaking out. We haven't broken yet. I have to see confirmation on this chart. But if it does happen, gold's in good shape.
Gareth points out that the Russell 2000 has underperformed compared to the S&P and NASDAQ, driven by a few major tech stocks. Magnificent 7-8. Small caps in the Russell struggle more with higher interest rates due to more considerable debt burdens, and their exclusion from the big tech rally has limited their gains, reflecting broader market challenges. Gareth Soloway exposes that much of the market's optimism seems priced in, unlike when Trump first took office with lower valuations and a different economic cycle. While initial actions like deregulation might provide a short-term market boost, potential government cuts and reduced debt-driven stimulus could accelerate a move toward recession. Silver's value is split between its role as a safe haven asset, like gold, and its industrial demand. While silver is showing positive technical signs, its industrial demand could decline if a recession hits. A strong U.S. economy and a recovery in China would support silver's rise, but investors should closely monitor economic activity when investing in silver. Now let's shift our attention towards the interview.
What's amazing about this is it was by literally a point or two, right? So if we draw a double top from the 2021 November high right there, we pierced it by just a hair, and then we started to come right back in. What's interesting too is that if you look at this shows you that really you've had the S&P leading, you've had the NASDAQ ripping. Why hasn't the Russell performed? I think part of that is higher interest rates since these lows where they've been raising interest rates. It's kind of made it so small caps struggle more because they're the ones that have to borrow money. They usually have bigger debts on the balance sheet to take care of. But also just the mere fact that it's the magnificent 7 or 8 now, that's been driving the S&P and the NASDAQ higher. Those are not inclusive in the 2000, the Russell 2000. And so without those companies like the NVIDIAs, the Apples, et cetera, the rest of the market is basically a representation of the Russell 2000, and I think that's pretty important. I think most is priced in at this point, right? So still part of the market is saying, okay, we're nervous about tariffs. So if the tariffs aren't so bad, that could give us a little bit of a boost. But it's a lot different than from when Trump came into office his first term, right? Markets were like 100% lower. I mean, incredibly low compared to where they are now. Valuations were much lower. And then also the economy was in a different part of the cycle when he first came into office as well. And so again, investors reacted in November by pushing the markets up basically to all-time highs, and they're kind of front-loading his deregulation and his efforts, in my opinion. And I also think that there's a risk here is that he probably is going to have Elon Musk do some cuts to the government and hopefully slow down that debt. And remember, the debt has been fueling the economy, right? It's stimulus. Essentially, debt, U.S. government debt is essentially stimulus. And so if you cut that back, it could put the markets or the economy on a little quicker drop towards a recession as well. So, granted, the excitement around the inauguration, his first couple acts, like his signing of these initial acts may give the markets a short-term bounce, but I'm actually looking to short into it. Yeah, so there's no doubt that silver's been a little bit more of a struggle. I think the key to silver is understanding that 50% is the store of safety, which is like gold. 50% is an industrial metal that's used more and more, right? So the key here is, and silver right now is trying to close above a key trend line. So that's a positive. But again, if you're a silver investor, and one of the reasons why I'm a big fan of diversifying with gold and with other assets is that if we were to slip in a recession. Right now, the U.S. has not given us any doubts that the economy is still strong. But let's just say all of a sudden we start to get signals. Then that industrial side, investors will have to recalibrate how much demand will come from that for silver. So as long as we have a strong U.S. economy, especially if China starts to get out of their funk, then silver can really go higher. But again, just as an investor, you want to be very tuned in with silver to how the economic activity is going on.
Gold and silver remain resilient assets amid global economic uncertainties, with gold showing strong safe haven demand and silver balancing its dual role as a store of value and industrial metal. Meanwhile, the dollar's strength reflects global struggles and safe haven flows. At the same time, the Russell 2000 underperforms due to higher interest rates and the dominance of a few tech giants driving broader indices. Concerns about economic cycles, potential policy shifts, and the risk of recession temper market optimism. How might central bank policies impact gold and silver prices in the coming months? What indicators should investors monitor to assess the likelihood of a recession affecting market performance? We'd love to hear your thoughts in the comments. If you found this video helpful, give it a thumbs up and subscribe for more updates. Thanks for joining us on this journey.